Congress just passed H.R. 1, the Omnibus Tax and Spending Bill, which has far-reaching policy consequences. Now, there's a lot in this bill, but what I want to focus on today are three things that Carta has been fighting for and that are going to have a meaningful impact for the innovation ecosystem. The first is the expansion of qualified small business stock. The second is the improvement of R&D tax credit. And the third is the preservation of carried interest tax treatment. So let's talk about what that means. First, QSBS is a tax incentive that drives capital and talent to the startup and innovation ecosystem. It does so by allowing shareholders, whether those are employees or investors, that hold shares in eligible companies for 5 years to benefit from those shares tax-free. Now, what we did here was expand that treatment. First, we allowed more companies to be eligible by raising the cap for eligible companies from 50 million in assets to 75 million in assets. Second, we improved the benefit for the individual shareholder, increasing that from a cap of 10 million tax-free to 15 million tax-free. And third, we ultimately let that benefit start phasing in early, starting at 50% of the exclusion in year 3, 75% in year 4, and the full 100% exclusion in year 5. This is going to drive capital and talent to the riskiest segment, but also the most important segment of our economy that drives economic opportunity and innovation. Now, the second thing we do is help expand the incentive to invest in innovation for these companies. And we did that by improving the R&D tax credit. Now, what we did here was allow companies to deduct R&D related expenses and investments in year 1, rather than have to spread those deductions out over 5. Now, this is not only going to free up capital for companies to spend on a regular basis by lowering their tax liability, but ultimately help incentivize more investment from these companies into the innovative products and services that are building our future. And the third thing we did is we preserved the treatment of carried interest tax. Now, this is a tax treatment that is core to the economics of most investors and fund managers. And the reason why it matters is it really helps fuel, especially emerging and regional managers that benefit from it, insofar as starting and driving capital to the broader United States. Now, today was a big day, and we believe it's going to have important ramifications for the innovation economy. To learn more about what this means and how it's going to be implemented, as well as to engage in more of these policy conversations, click the link below.